Hello guys, welcome back to a new video. Those who haven't watched how to pass journal entry video and the simple journal entries video, I request you to watch them first so that it will be easy for you to understand this video. The link you can find it in description, or else you can also click this above I button. Goods costing 500 given as charity. Let's first do the rough work. The first account affected is, we have given some of the goods that we had purchased as a charity purpose, which means we have given it somebody for free of cost. Something like when you're having a hotel and a beggar comes and asks you some food, and you are giving him some free food. That is nothing but you have some goods which you have it for your business, but you gave it that food to the beggar just as a charity purpose. So here the accounts affected is charity. Charity, you can mark that as your expense or loss, whatever you assume. This is one account affected. The another account affected is, it reduces your goods, but you cannot use goods account or stock account. Instead you have to use purchase account. But here we are not purchasing the goods, but out of the goods that we had purchased, we used some of the goods for non-business purposes. The reason behind this is the types of expense. There are two types of expense: direct expense and indirect expense. Direct expenses that are related to your purchase and manufacturing. So when you purchase some goods, that expense you will mark it as a direct expense. Now out of the goods that you have purchased, some goods you have given it for charity purpose, some goods owner has taken, some good has been destroyed, and these are not something that is related to direct expense. So they are all indirect expenses. Indirect expenses means expenses that happen after purchase and manufacturing of goods. So out of the goods that I had purchased, some of the goods were not direct expense, they were indirect expense. So we will remove from purchase account and we will mark that as that respective expense account. So same thing we are doing here. We are removing from purchase account, we are marking that as a charity expense. Suppose if we are giving goods as sample, especially in the case of pharmaceutical industries, the pharmacists give goods as sample. So that they use it as an advertisement, marketing strategy. That is not a direct expense, indirect expense. So similarly we have to treat. Remove from purchase, mark that as advertisement or samples account, whatever it is. The same thing here now we are going to do. The money 500 value of goods given is an expense for us, but it's an indirect expense. But that was given out of the goods that we had, which was a direct expense generally we consider, which is a direct expense. So we remove from that account and we charge it to the charity account. Charity is an expense. General balance of any expense is debit. Purchase represents stock. Stock is an asset. General balance of any asset is debit. Now expenses, whenever we record, they always increase. Now what happens to this asset? We are not purchasing goods, but out of the goods that we had purchased, we took some goods and we gave that as a charity. So this stock decreases. Now apply the rule of increase, which says same effect. Debit account has to be debited. And apply the rule of decrease, which says opposite effect to general balance. It's a debit account, opposite effect is credited. It is to be credited. This is the rough work. Let's pass journal entry. Write the debit account first, that is charity account to purchase account. Narration: goods given as charity.